Well, of course, markets have not started the seasonally weakest month of the year on a very solid note. Let's get more with Tony Sycamore from IG. As they say, wake me up when September comes, Tony. The NASDAQ lower overnight.
Right on cue, and I suspect you've already spoken about the reasons why it has traded lower on the show, but I think the jury is out whether this collision was a minor bingle or something more substantial. We saw about a 4.2% pullback last month before it ended up closing almost flat for the month. But what I really like about the NASDAQ and why I'm looking at this potentially in a more serious tone is the fact that we have seen the NASDAQ hit that weekly trend channel resistance up around 24,000 currently, which was a level we expected the advance to stall. It had stalled, but it certainly hadn't seen that reaction from it, either in terms of pushing above it or rejecting it. Now we're starting to see some signs of rejection again. You can see it's broken below the neckline of a very wonky head and shoulders, not one that I typically trade off, but it has to be noted that it has broken below there. What I'm looking for now is if it were to break below the mid-August lows and then below the August the 1st low, that 22,673 low, then I think that starts to give us the green light that this is something more serious, and we're going to see a pullback towards the former record highs coming in around 22,000. So at this point of time, we've seen a couple of these, 2 to 3% pullbacks, and it has bounced. The buyers have stepped in. We need to be aware that could happen again. But right here, right now, it does look a little bit rocky with bond yields, the seasonals, those things which we've spoken about previously, all starting to line up for a deeper pullback.
And our market lower for a third session, is that on the back of Wall Street, or is it also a lot of these big ex-div companies?
Well, it's, 15 points of the fall yesterday came from stocks going ex-dividend. On top of that, the healthcare sector has just been rightly shunned since CSL reported 2 weeks ago. And as you mentioned, falls below that 8,900 level. It's the first time it's been below there for 2 weeks. And now it's knocking on the door of support at 88.50. I needed to hold above that 88.50. That's short-term support. Otherwise, we start to get some indications that we have seen a medium-term high up there at 90.54. And in line with the potential pullback on Wall Street, we could see the ASX 200 trade back to lows, which we only saw a few months ago, 8,600. We're not calling a massive reversal. We're just calling a pullback after a very good run higher. We know that stocks here are expensive. We know that stocks in the US are expensive, and potentially with yields starting to unsettle the markets, there is that potential for an orderly pullback.
All right, let's get to the Aussie because it's also weaker and we're awaiting the GDP print, about 0.5% growth expected.
Yeah, that's right. 0.6, 0.5 on the quarter, 1.5 to 1.6%, in line with the RBA's forecast for June quarter. For the Aussie, it really hasn't been doing too much of excitement value over the past 4.5 months. It's been broadly trading within this trend channel, 2 steps forward, 1 step back. It had a dip yesterday, back down towards that 65-cent level before it found buyers. By and large, I expect that to continue, this 2 step forward, 1 step back. I'd like to see it trade up towards 67 cents. So an inline GDP, given everything else which is going on at this point of time, would probably give that Aussie just that sense of stability above 64.60-ish, which is the trendline support, and it can continue to grind higher into year end.
All right, let's get into commodities. And actually, let's start with gold. I mean, record highs, 3,500.
Jules, we've been chatting about this for a number of weeks now. The setup there in gold, the technical, the macro, it's been wonderful, and it paid dividends earlier this week. It broke on Friday night above that trendline resistance coming in around 34.20, and it's all been one-way traffic since then. Now, I expect that any further gains from here more than likely hinge on how the labour force report comes out on Friday night and the BLS revisions next week. If they are both weaker and we start to talk about a 50 basis point rate cut, then 3,600 next stop for spot gold without a doubt. But by and large, I mean, the technical, the macros, they are supportive. They're going to remain supportive. Dips need to be looked at as buying opportunities in terms of this can potentially push high up towards 37.50 into year end.
All right, what about oil?
Oil, well, I mean, oil's been an interesting one. Finally, we're starting to see those tailwinds permeate through into higher prices there. You've got the situation where Ukraine continues to target Russian oil infrastructure. You've got the 50% tariff on India due to its continued importation of Russian oil. There's a lot of things starting to go, and you're expecting another drawdown in inventories this week in the US. That's probably going to be the last one because we have seen the end of driving season in the US. That's generally from June to the Labor Day long weekend, which was just completed. But by and large, I think the fact that it has broken above that You can see the yellow line there. We've been talking about it for a while. Above there now, if it can sustain that break, then up towards the 200-day moving average, coming in around 67.30. And if it can get above there, then potentially you're looking for a retest of that $70 level. But tailwind's now broadly supportive for crude oil, and it's starting to be reflected in the price.
What about Bitcoin? Who's Michael Saylor and what is he doing?
Well, he was on the bid last night and the night before by the look of things. He picked up another 4,000 Bitcoin down there as it made that low around 107,000-ish. I am not surprised by the pullback. Bitcoin is a dual split personality asset class. Sometimes it trades as a safe haven. Sometimes it trades as a risk asset. The sell-off at the start of this week was more akin to being a risk asset, but given the fact that the reason why equities are selling off, we've got concerns around tariffs, central bank independence, all those sorts of things, I expect to support gold, and I expect Bitcoin to start to reflect that with its safe haven status and push back up towards 120,000. I wouldn't be looking too broadly for a push above that $125,000 level at this point in time, but if it were to break above there, that's a pretty good sign that we have completed a correction and that the uptrend has resumed.